Today, we've got our favorite format, what we call Not Your Average Insights. We are reacting to the news of what's happening out there in real time, the biggest stories, including the government shutdown. What does that mean for real estate investors? Including the refinance wave that is happening now that the interest rates have been coming down, and some really weird stuff happening. Gold hit an all-time high at the same time as the market hitting an all-time high. We're going to break it all down, a little data plus perspective. Welcome, everybody, to your weekly edition of the Not Your Average Investor Show with me, your host, Pablo Gonzalez, and the man that I affectionately like to call GC because he's got the genius concepts, knows how to generate cash flow, is a great co-host, and because his name is Gregg Cohen. Say hello, Greg.
Hello, everybody. Fantastic to be with you today. You know what, Pops, you said that I know you're struggling a little under the weather and all that good stuff. Before the show, you said, hey, you know what? I don't know if I'm going to have energy. Dude, you just showed up. Good on you, man. I appreciate you for fighting the good fight and being here today.
I appreciate it. For everybody that doesn't know, I am under the weather. I'm at a conference. I need all of my powers today to be able to do everything. And we're just gonna keep it going because primetime players show up in primetime moments. GC, speaking of primetime moments, awkward segue, but everybody's talking about this government shutdown. It seems to be in the news everywhere. I know that as I'm like in the teeth of, trade show season, it's affecting planes, it's affecting, like all these different things. When it comes to real estate investing, the housing market, and you think of a government shutdown, what do you think are the things that are getting affected?
Well, I think in the short run, there's a lot of what we'll call relatively minor things that are more annoyances than anything are probably affecting those in the real estate world or those who have some part in maybe a transaction in real estate. So that's kind of what we see inside the walls here. We manage 5,600 homes. We build, 300-400 a year. So if there were major things going on, I can tell you in our walls, we would feel it. We would be talking about it. We would have solutions for how to overcome it. I can tell you, we just got out of our Tuesday morning meeting earlier today. We talked nothing about the government shutdown. It is not affecting, major players in real estate. The major things like rent collection or the ability to build homes or the ability to close transactions in large part are not affected today. We're in week 3 of the government shutdown. And we can kind of play the what if game and what would happen if it continues to go on. But, like we know, most times these government shutdowns, they are self-created by our politicians, and they tend to be here for a little bit and then miraculously they get solved and they're gone. So I think nobody's really anticipating this is going to get to a place where there would be major structural challenges that come from the government shutdown. But, there's just, I think people in the real estate world are more like everybody right now. We're annoyed with flight travel. I'm supposed to see the Blue Angels this weekend. They're supposed to fly over Jacksonville this weekend. I don't think the Blue Angels are going to fly this weekend. So I think it's more of that general annoyance right now.
As I was talking to Marta about it, I think it bears talking about the idea that this is a federal government shutdown. And when we talk about the housing market, we often talk about a national housing market, but we say a lot on the show that real estate is a very localized game, right? Like there just isn't a lot of things that come from the federal government when it comes to a housing purchase level, right? Like I think the only thing I can think of is like funding from things like HUD or, I don't even know if the Section 8 housing, do those checks get cut at a federal level, right? Like, but like our property taxes are local, our permits and things of that sort are done locally, right? Like, is there, can you just kind of like talk me through that? Because I was trying to tell Marta about that and I felt like I was kind of like fumbling around with it, but I feel like you have a better purview on that.
Yeah, well, I think the HUD question is the most probably pressing question on the minds of our clients, those who own rental properties and who may rent properties to HUD, either with JWB or yourselves. So HUD is both local and federal. The money is federal, right? The administration of it is local. And I think when we're talking about are we receiving HUD payments? The answer is yes. We have no instances where we are not receiving HUD payments. We are not expecting to have any sort of delay at this point. And the reason is because those funds have been appropriated prior to the last 3 weeks. Now, the staff to support the HUD office, that is a question right now. Some are being furloughed. Some, I actually read up on it. Some are being expected, asked to work without receiving pay. Those who are critical to the functions of HUD, carrying on right now. So we appreciate the efforts of those fine people. But it's more of the workforce right now that the decisions are being affected. So you can expect things to be temporarily slower as far as the functions of HUD. Maybe when HUD goes out and does a HUD inspection, it might be slower, if this government shutdown continues to happen. However, at this point, we have no reason to believe that there's going to be a lack of funds because those funds have already been appropriated in the past. They are there for the near term is the best I could read on it. And so I don't think our investors, and certainly I and we here internally, are not fearful that the HUD payments are not going to come in, assuming that this gets wrapped up in the relatively near future.
Yeah. And we're kind of talking about, there's the idea of short-term implications and long-term implications. We're going to talk a little bit on the data of long-term implications because you did some research there, as you normally do. But as we are talking about short-term implications for us as rental property investors, our short-term stuff is monthly cash flow, right? So that is when, who's paying rent. That seems to be also something that would maybe affect you heavily localized, right? Like if you're in the DC area and the federal government employs a whole bunch of people, maybe that's happening, like maybe people aren't able to pay their rent, but it's not necessarily a national thing. It's not something we're not feeling like it's not like people aren't getting paid at their jobs in Jacksonville very much. So, like are you seeing anything from the rent collection standpoint or residents talking about them not able to make rent?
We're not seeing anything about that.
Yeah.
I mean, I think 3 weeks of a furlough, which is what most government workers are seeing, is not enough time for people to, generally to structurally change the foundation of how they're going to receive money to be able to pay rent. We could play this thing out though, and if somehow our politicians let this thing go on for months and months and months, which I just can't see happening, could you get to a place where every place in the country is affected by that? Yes. Could it affect rental income at that point? Sure, if we're playing this thing out to the nth degree, but I just don't see any of that happening. And quite honestly, it's not really worth it, I think, to investigate the what ifs there. There's a ton more other what ifs that are outside of our control that probably have an effect on what we do on a daily basis rather than this what if, which is totally in our control. You could see if politicians couldn't get their act together to be able to, get the government back in business, and it caused all parts of this economy to flounder, you could imagine the angst that their constituents would have for their lack of decision-making ability. So I have confidence that they're going to get on the same page and figure this out.
I hope so too, GC. Last thing on the short term, when I think of cash flow, right? And then I think of maintenance and different things that have to happen inside of homes. Just double checking my logic here. Permits, anything that has to do with kind of like getting something done inside of a home that would have to happen, those are not federal, right? Those are all
Correct.
local, county, stuff like that. So it's not affected by this thing.
Yeah, absolutely correct. We have seen no slowdown as far as permits, our ability to do the construction and maintenance of homes. It has not been affected. Those are largely local jobs and local jurisdictions, not federal. So yes, your thinking is right on. It's not affecting it.
Cool. I'm glad my thinking is not off, today. So that being said, GC, you put together some comparisons here of, what these long-term effects might look like, right? So people might look at government shutdowns and think that, how does this affect home price appreciation? You put these comparisons together. It seems like not really nothing that you can tell that has any correlation or effect or anything like that right here.
No, and I knew the punchline here that it wasn't going to affect it long term, but I was curious to see what home price appreciation did in the year of a shutdown and then the year following a shutdown. So I went back and we looked at our most recent government shutdowns, the year that they happened, the year after, and then the total over the next 5 years, just to see if there were any relatively short-term impacts or long-term impacts. And we didn't see any. So you can see here for both Jacksonville and the US overall, and you can see that There are some years in the government shutdown year where home prices appreciated a lot more than the average. There have been some years where there was home price appreciation that was less than the average. And the same could be said for the following year. But what is unmistakable is over the following 5 years, home prices went up. And so we really don't see any causality between government shutdowns and home price appreciation. In fact, what we see is that home prices keep climbing. That's more of a function of investing in a critical asset or it being a critical asset for the homeowner and the renter. And if you've watched the show for a long time, that really shouldn't come as a surprise for any of us because as we've noted here many, many times, this asset class is consistent. And 100% of the years outside of the Great Recession, at least in Jacksonville, 100% of the years, home prices have gone up in value. So not surprising that we land on the punchline there that home prices go up in the year of government shutdowns and the year following.
Yeah, Ringmaster Drew Barnhill is basically saying, yeah, no correlation, nothing statistically relevant here. That's exactly what we're saying as well. I like the line in the data that we read from John Burns, basically saying housing demand is structural, not situational, right? Like
Yeah.
we are looking at an undersupply of homes that are still existing, particularly in our workforce housing kind of like sector where we like to invest here. And, that's a structural thing, not really going to be affected by something this situational. You also have the data to support that it doesn't disrupt rents. Is there anything you want to hit on here or just kind of the same thing?
I mean, the punchline is the same. Rents have gone up the year of the government shutdown, the year following. You know what was interesting though is, and this is a little bit adjacent to the topic, but I saw rents and in the earlier years, 86, 90, 96, and I looked at the 5 years cumulative in Jacksonville and I compared that to the 5 years cumulative in the US. And I thought it was really interesting to see that the US actually appreciated more for rents over those 5 year increments than Jacksonville did. But now, as you start to see in 2019, and as we are, or what we have seen really over the last 15 years, is that rents in Jacksonville have gone up so much. So I think as I was starting to think about this, I'm like, you know what? What migration patterns have changed over the last 40 plus years? How much easier is it to move and to live and work where you want? And I think that probably has a big impact as why we see rents going up at a much faster pace now in a market like Jacksonville than the US, but it wasn't always that way. So a little bit of an adjacent point, but I thought that was interesting as I did the research there.
That is interesting indeed. And then, of course, unemployment, right? Like lasting impact of unemployment. That's the other long-term data that we'd be looking at. Doesn't seem to be anything here either.
No, and just for everybody's knowledge, the average unemployment rate in Jacksonville over this data goes back to 1990, is 5.2%. The average unemployment rate across the US is actually 5.7%. So I think it's good to have that context here to understand that unemployment right now is very, very low as it is going up slightly, but we still have a long way to go to what average unemployment has been, over the last 35 years.
Yeah. So final takeaway when it comes to this shutdown, it is structural, not situational. Like you said, there is real structure to the supply and demand of housing, to migration patterns, to the fact that Jacksonville, like it is a local market game. Jacksonville is a booming town with a very, very healthy job market. So putting this thing kind of like to rest a little bit, we don't really have to worry about. I mean, any final takeaway of government shutdown for now, GC?
Shouldn't have any impact on your decision to invest in rental properties. If the decision makes sense to you, which you being here on the show, it's probably an inclination that it makes sense to you, you should do it. You shouldn't listen to the noise of a government shutdown. The data supports it. You probably just know it. We've been through this, in 2019 and 2013. And, many of us have been at a point where we remembered exactly what that felt like. It was a blip. It got all the headlines and then it was over. That's what this is going to be. So if investing in rental properties is right for your plan, find the right team, find the right market, invest in that asset as soon as you can because it gets better with time. Don't let this be one of those excuses as to not move forward.
I am so familiar with those excuses. As you remember my story, like 2014, I talked myself out of like doubling up with JWB and I regret it forever. Speaking of structure, speaking of markets, if you don't have the Q4 2025 Jacksonville real estate market outlook that we put together based on Gregg's forecasts and his reports that we do. This is your opportunity to get a free copy of that. You can scan that barcode. Look at him. Look at GC
How
holding
about
it up
that?
there.
How
Uh,
about that?
How about that? How about that? Or go to jwbrealestatecapital.com/report. And Joanna also put the link in the chat. If you haven't downloaded that thing, go download it. It's really, really good so that you see what's coming. Second topic du jour, Gregg, topic of the day, number 2. There's a refi wave is what we're hearing, right? That is the terminology. There is I think the quote here is when the average 30-year rate fell into the mid 6% range, that unlocked a threshold for perhaps 3 to 4 million households to refinance. For real estate investors, that matters because it increases the number of owners that can improve cash flow, reset their debt, and potentially reposition their portfolios. So 3 to 4 million Americans, GC. What is your feeling of this like refi wave from the, is that something that you're talking about in the Tuesday morning meeting? Is this something that you're feeling? What's kind of like your thinking on the refi wave?
Yes, absolutely. In fact, prior to being here with you on the show, I was in a meeting with our service team, leaders on our service team. How can we help clients see what refinancing can do for their portfolio to lower their monthly payments on their existing assets, or a combination of lowering their monthly payments on their existing assets and potentially pulling money out, harvesting the equity that they have there so that they can get to their target number of JWB properties to get to their passive income goal. So I think this is something that people just don't really think about. And I think the reason is, because we're conditioned to like make moves when there's large numbers, but when we're talking about a drop from 6.9% to 6.5%, us as humans, we don't really know what that means. And we need people, JWB is conditioned to be that voice for you and say, hey, listen, this is what it really means as far as taking that goal of you retiring in 15 years, and maybe now it's 12 years by taking some action here right now. So I think we're, as citizens, we're conditioned to see points, percentages of points move, and we're like, whatever, I don't know. That's not even a full percentage. That doesn't matter. But really, a quarter point drop to interest rates is a time for you to perk up and talk to your trusted advocate, whether that's JWB or whoever it may be for you, and start to rerun your scenario. Start to think about what your passive income goal is, because right now, with the drop that we have, we're able to reposition that capital to harvest that equity. And it's a time where you can get more positive cash flow on your existing assets that you refinance, and you can get more positive cash flow on the assets that you acquire because of this strategy. So I think it's a really, really important time for people to be paying attention.
I find that number of 2 to 4 million pretty interesting. Like
Mhm.
I didn't expect it to be like that big for such a small kind of like shift that just happened. It brings up the terminology of in the money. I hadn't heard that before, right? Like these articles are all talking about like, certain people are in the money if they're inside the spread. How would you describe what like in the money is for these like 2 to 4 million Americans you see?
Yeah, we all love to be in the money, right? I want to be in the
Yeah,
money.
it's everybody wants to be in the money, right? Yeah.
Yeah, let's get in the money, man. That sounds like a great place to be. So in the money means it's a smart move, most likely for you to refinance, is what in the money means. And really what it is it looks at what is your current interest rate on your existing property and the loan that you have. What's the interest rate you could have today? And the interest rate today, of course, for you to potentially be in the money has to be lower. But it's not that simple, right? We have to look at what the difference is. And then we have to understand there's some costs to come along with refinancing. And so in the money means, are you going to have enough dollars saved on a monthly basis to be able to justify the small amount of cost that come along with refinancing? And the cool thing is that, just like you said, you don't have to have huge swings for there to be a ton of people, millions of Americans that are now in the money. And it's because there's relatively small costs when it comes to refinancing. It might cost you a few $1,000s of cost when it comes to refinancing. It can go up or down a little bit like that. Talk to us if you want to know the real number for you, but it's a relatively small amount. So you don't need a ton of mortgage interest rate movement to where it makes sense for you to save $100 a month on refinancing. And if it costs, you know, $2,500 to refinance and you save $100 a month by refinancing to the lower rate, you know, you're going to be at a place where you're winning on that bet, you're winning on that trade in 2 years, because that would be 24 months, be $2,400 that you saved, and you spent $2,500 a year up, and then the rest of the 5, 10, 15, 20 years that you own, you would have made a lot of money. You would have been in the money at that point. So that's really the really, it's a relatively quick and easy analysis that we can help you with. And if you're not a JWB client, you can probably go to your lender or another financial advocate for you who can probably help you run this. This is not something that's super complex, but I would 100% encourage all of you who are rental property investor owners to explore this now, because I think this is a big deal.
That's the thing. Every time we talk about this, I'm always like reminded that this is cheaper and more simpler than I'm like conditioned to thinking when I think of getting a loan, right? Like when you describe it, you're just kind of like, you know, loans I tend to think cost like $10,000 and the process for it tends to be really grueling. Every time you describe it, it seems to be a quarter of that cost and like a tenth of the effort. So this idea of being in the money feels much more accessible whenever it's described. And maybe that's why, you know, like I'm just kind of like justifying this idea of like 2 to 4 million people are like all of a sudden like in the money. Why is that? And it's because I need to kind of like decouple my experience of like my primary loans from like what the experience of doing this kind of thing is, because there's clearly way less friction, right?
Well, I'm glad you brought that up, because when you are buying the property the first time, what you have in your mind is my down payment, which was tens of thousands of dollars, and my closing costs, which can be 3, 5, 10, $15,000, depending on how you do this. But a lot of that are expenses specifically on the closing cost side that you don't have to do when you go and do a refinance. Or a better way of saying is that you paid it already the first time. Like, you have to fund reserves for property taxes and insurance. That's what you do when you start a loan. Well, you already have that reserve funded. When you go and refinance, either it just switches over to the new loan if it's with the same lender or whatnot, or you get that reserves that you already paid in the first time back, and then you use that to then fund your reserves the second time. So a shorter way of saying this is that it's not nearly as expensive to refinance, because a lot of those costs that come along with the first time, you just don't have to do again. You already did it. So, and then you also aren't thinking about bringing tens of thousands of dollars now. You can refinance. The money is given to you because you didn't made a good decision and you harvested the equity. You got the down payment now, and your closing costs are substantially less. That's how you can wind up with a refinance where it's a very small amount of capital required to do the loan.
Nadeem is asking, the cost of the refinance can be included in the loan?
Yes, absolutely. So it's actually no money out of pocket.
Interesting. Okay.
Yep.
Well, you know,
How about that for frictionless?
That sounds pretty frictionless, right? So if you want to find out if you are in the money and you want a team of experts to do it for you, right? JWB team is here for you to do that. You can call JWB at 904-677-6777. You can text them right now and just kind of like get on the books at 904-293-0341, or you can always go to chatwithjwb.com, schedule an appointment, and pick the time that's best for you. Joanna put all that stuff in the chat. Figure out if you are in the money. All right. So GC, that being said, speaking of money, this is a much better segue. You and I were on a run recently, and I'm like, gold and stocks both hit all-time highs at the same time. Isn't this weird? And we're like, we should totally do a Not Your Average Investors insights about this, because this is such a unique situation. I have this article here from Forbes that talks about how like both setting record highs rarely happens. Talk to me, Mr. Finance spreadsheet guy. Like, what, you know, when we brought this up and you're like, yeah, man, this is really weird, we should talk about this. What do you think about when, like, why is it weird, first of all, that stocks and gold are both hitting all-time highs at the same time?
Yeah, well, when equities or stocks are usually hitting all-time highs, the general consensus is optimism out there. It's an environment where investors are saying, hey, you know what? I want to take advantage of this opportunistic time to invest. I think the economy is making a lot of money. I think companies are making a lot of money, and I want to put my money in equities and stocks. So it's an opportunistic play. When you start to see gold rally, what investors are generally saying is, we're scared. We're scared because gold typically doesn't have the upside of equities, and it also doesn't have some of the other benefits that other similar assets might have, like a yield, right? You don't rent gold out. So what gold does really well is it's a store of value. So when gold is doing really well, and there's a lot of people saying, I want to put my money in gold, people are saying, you know what? I just want my money to be there when I need it, which is the opposite of opportunistic. So we're in an environment right now where people are saying both. I want both, which usually is contradictory.
Yeah, yeah. Man, I remember the first time that I remember gold really rallying in my kind of like memory was during the Great Recession, right? Like I remember it was like from 2008 to 2010, everybody was like, buy gold, right? Because everybody was just like really terrified of what was happening. They were just running towards it. Back then, I wasn't educated as a real estate investor. I didn't know that Warren Buffett was saying go buy single family rentals. But I remember that when during a time when my 401k was completely cratering, everybody was saying buy gold. The idea that there is both fear and optimism at the same time, I think it's something that bears kind of like looking at, right? Like when I read these articles, when I read that article, it's talking about there's still this kind of like AI productivity boom that everybody's kind of like betting on. People are really bullish about like the anticipated rate cuts from the Fed.
Mm-hmm.
Um, the consumer and labor markets have been like more resilient than we thought, right? Like we're getting good numbers there. And then that's like the cause for optimism. And then the cause of fear, I don't even think I need to say, right? Like I feel like we're like we're living in a fear thing, in a fear economy for as long as I remember, right? But it's like the government debt that still we're not really making much inroads into. Geopolitical instability continues to be both foreign and domestic, something that I think about a lot. And then there's the idea of like the weakening of the US dollar and, is inflation around the corner and stuff like that. Those are kind of like the two balances of like fear and optimism. And I just kind of wonder, GC, like when you think of what's happening, right? Like you were just basically saying like people go to gold as a store of value, but it doesn't also have dividends or yields or I forget what was it that you just called it?
Well, so gold, you can't rent gold out.
You
Gold,
can't
gold is
rent it.
not, doesn't produce like rental income.
Yeah.
So it doesn't have a yield
But it doesn't really come with like it doesn't have like high upside either, right? Like it's like a high
typically.
floor. It's a high floor thing without a
Right.
high upside. Stocks are kind of like high upside, lower floor.
Right.
I mean, what are we supposed
You know
what
what
are
I
we
think?
supposed to do,
You
man?
know
Yeah.
what? I think our economy has a lot of money in it.
Yeah.
We have people have the luxury of kind of doing both right now is one of the things.
Yeah.
And I'm totally generalizing. Please don't take this as like a tone deaf comment to the affordability challenges that we have. But a lot of people, there are a lot of people that do have a lot more money, and it makes sense for the amount of money that was injected into the economy and the
Hmm.
fact that we still haven't seen the labor market break. We haven't seen a recession since that
Yeah.
time, right? We haven't seen, I mean, our GDP has continued to go up. So, there is a lot of money floating in the economy. And the reason why I would think that that is at least a part of this is because people aren't necessarily forced to make the difficult decision of which one do I need to do. So I think that's a part of it, and then I, I think,
Yeah, I'll stop. I'll let you just pause on that. I agree, right? Like it feels like we during COVID printed a ton of money, right? Like we cut everybody checks. We were expecting for a really long time some kind of recession. We hit a soft landing, feels like, right? Like it's I hadn't thought about it the way you're saying it, but we've essentially had our cake and eaten it too, right? Like the market has continued to climb, things have continued to go up in price. We still don't have like this like astronomical, like we've held interest rates high for a really long time. It hasn't really affected things the way that we thought they would. So we've just kind of like having our cake and eating it too. So people continue to bet on the upside, but this like idea of all the causal structural things that we expect when the aforementioned things that we did tend to happen, generally has a cause and effect that hasn't come yet. So it makes sense that people are both looking for it while also trying to get it while it's going good, right?
I think so. I think so. And
Yeah.
I think the reasoning to live in a fear mindset when it comes to investments and a growth mindset, the reasoning to get there is sound. for both of them
Yeah.
as well.
Yeah.
It's not like it's a highly emotional move to get to a place of like, hey, listen, I'm just fearful. I want to put my money in something that just stores value. We could do a show that just brings that fear element, and I think it would be based on data, perspective, sound judgment, right? We could
Yeah.
equally do a show get to the other conclusion. And so I think there's a lot of money in the economy. There's sound reasonings for both. I mean, this is a unique time to be an investor. It really is. And this has been, I think, how I've started probably the last 2 to 3 quarters of my quarterly market outlook is like, guys, I think we're looking for a North Star because the signals are confusing. And I think when you have confusing signals, you have things like gold and equities both hitting an all-time high at the same time. So I just think that's where it lands.
Where do you see rental properties in this, GC? Like, I think we talk a lot about rental properties as like a good high floor and good upside. Is there any of like the optimism that could bite us in the butt, or is there anything of like the fear that is actually like really serving us when it comes to rental properties? Like, where do you put rental properties when it comes to this like mix of like fear and optimism at the same time?
This is where I think it shines. This is where I think rental properties shine. If you ask my business partners to talk about who is the most conservative one, who can see the fear angle and who can see the optimistic side, who probably plays more into the fear side or the conservative nature, it's me out of my three business partners and I am that way. And part of the reasons that I love this asset class so much is because it checks that box for me of fear risk mitigation. Like this is a sound investment to make. And when the fear is ringing in my head, and this is a sound investment to make when I'm looking to be opportunistic and to use leverage to get an above average return. So I think I've said this many times, I think this asset class shines in moments where people are confused or fearful. I think it really does. It's funny because we got all the headlines when interest rates were so low and home values were racing up in 2020 and 2021. And we were the darling of asset classes at that time.
Yep.
But that never pinged for me as the reason to buy this investment. And I shared it many times on our show. The reason to buy this asset is because it's going to be there for you when you need it. It's going to be there when your financial outcome that you're looking for, your retirement account, or sending your children to college, or wanting to take that trip around the world, which one of our clients is doing right now, sailing around the world. Like that money is going to be there for you. And it can create yield for you too. It can create rental income substantially, substantial rental income that can serve you when you need it. So, I think this is the time when the asset class shines, and I don't think there's enough people out there who understand it. I don't think there's enough people out there who educate themselves and surround themselves with a community like this. I think we're the oddballs, we're the not your average investors, but when you know how this asset class works and you have invested in it, like you have, Pablo, like we have. I mean, Pablo, do you ever worry about your rental property portfolio right now and amongst all this other fear that's going on?
I'm like a worry monster about everything right now, GC. I don't know, like I've told you, right? Like I think the world has gotten to me kind of like post the Charlie Kirk thing. I would say I've just been like it just feels everything feels so scary and everything is so heightened. But anytime I think about my rental property portfolio, like it's the thing where I'm just like, where else? Like, what else would be more solid? Like, what else? Like my wife and I have these conversations, right? It's just like, you know, what are we gonna do? Put our money under a like under a rock somewhere, under a mango tree? I don't know, right? Like, if we are in our peak earning years, we want our money working for us. We want to have it somewhere. Like I just can't think of something that I feel better about than a workforce housing, single family home in a growing market that's like on the right side of all the different trends. So every time I try to get there and it's like, well, I don't know what, like, could a civil war happen? Like, yeah, I guess, right? Like,
Yeah.
no idea what happens there, but like, I just don't like I said, right? I mean, not like I said, but that my family comes from two places that have had big diasporas, right? Like Cuba and Venezuela and all that stuff. And it's like, I just can't imagine it. Even when I go there, even when I go from like, what happens if we have to like leave the country? It's like, what country would I go to that has less of a risk that I would have to leave the country than this country, right? So it's like I can strip it all the way down to my biggest fear, and I still get to the point where it's like, in a world of complete discomfort, like this is the thing that brings me the most comfort. I don't know, man. I don't know if I was oversharing there, but that's
I
just
I I can relate. I can relate to the feeling. I can't relate to everything you said there because our backgrounds are different. But I
you're
can
not
relate.
Venezuelan.
I think deep down it might be. I don't know.
Yeah.
We get along so well. But that train of thought of like, hey, what can break this? What has to go wrong for this to fail? That can happen in any asset class, by the way. That you can go down that path, and we could outline that how that would fail in rental properties. It's there, right? But what pings in my head is it's a whole lot quicker path to potentially it failing in other asset classes, right?
Yeah.
And other world events leading to other concerns that could get me there faster. So I
Mm-hmm.
you know, it doesn't feel great. Part of me doesn't feel great to say, well, I keep coming back to this place where it's not going to fail. It can fail. We should recognize that.
Sure.
But the path to failure in other places that we're probably already putting our money is a lot quicker when you're looking at how you get there.
Totally agree. Laura Colby says it very well in the chat. In confusing times, it's good to go back to fundamentals and invest in a critical need asset, single family rentals. I think that is critical need, growing economy, undersupplied. Like it's just right with an
Nailed
operator
it.
that yeah, with an operator that trusts. So Laura is obviously one of the weird ones like us that are not your average investors. Linda Mercurio has a question, GC. I don't know if you've like read up on this, right? But I love Not Your Average Insights is exactly for this. Bring up topics of the day, we'll comment on it. She's saying, can you comment on today's headline from Bigger Pockets? The headline is Single Family Rent Growth Declines as Build to Rent Units Flood the Market. Build to Rent have large scale, meaning built to rent large scale communities with clubhouses, pools, gyms, and the layout and feel of single family home. Can JWB do the same?
And JWB do the same. What saying, can we flood the market with build to rent?
I'm not sure. I wonder if she's saying, can JWB like build these like, so when I hear Linda, give us some clarification of what you mean. Do you mean like can JWB build that, or can JWB's rental properties do the same? Right? Like when I think of when I talk to people about build to rent, wasn't a thing a while ago, but nowadays a much bigger topic. It seems to be growing in this like moving into a rental America, right? Like we're going to need more places to rent. But most people, when they talk about build to rent, they're talking about exactly what Linda just described. Go plow down like a whole green field, build 100 homes with a clubhouse and a pool and have a gate at the front and like go do all that thing. I think I don't know anybody that talks about build to rent the way that JWB does it. And I think it's a a marvel of engineering by you guys and manufacturing of what you've created. But I don't think it can happen in most cities because of the density factor of it, right? Like I think there's just like this idea that you guys were able to bring like one house up at a time to infill lots to start to like fill neighborhoods from the inside as opposed to like move to the edge of the town and start to like expand the edges of town. And I
Mm-hmm.
think that's a very different conversation from a the amount of houses that you bring on all at once and flood the market, like Linda said, and B, the idea that you're not building these amenities because you're building inside the urban grid and there's already like the necessary kind of like things that fill in that you'd have to do by yourself. So that's just my thinking as Linda's responding.
Yeah. Well, okay. So I everything you said there is true.
Yeah.
Let's play out like devil's advocate though,
Yeah.
because there's like the micro what JWB does there, and there is a ton of value for the community, for the way that we do it, for investors, the way that we do it, which is way more inefficient. It is way more efficient to go out and go to the edge of town and build 100 unit, 200 unit build to rent subdivisions. We do not do that. And it's for the benefit of the community, for our investors, for control, for flexibility. It's kind of how we do it. So all that's true, but that's the micro side. The macro side would be, what if everybody else does it? Because it can be done in
Yep.
Jacksonville. And could that plummet single family rents? Because I think that I saw the headline that came out from Bigger Pockets today. Didn't read the article yet, but I laughed at the headline because single family, first of all, there is no national real estate market. So when you say that rents are declining, single family rents are declining, it's not accurate. And probably most of the markets out there. Jacksonville would be one of them. The rents are actually up. Single family rents are actually up year over year in Jacksonville because I look at the John Burns data every month when it comes out. So I laugh a little bit because it's not accurate to say a blanket statement like rents are. It can be accurate to say it's a blanket statement because you can look at average rents, but it's not helpful because nobody invests in a pool of homes that is like in every market in the country. You choose markets to invest in. So single family rents in Jacksonville are up. But the point is, others could go so big into build to rent in a market like Jacksonville that could depress housing rents in Jacksonville single family rents because of supply. Could that happen? Yes. There's other things that also affect it. The amount that we are currently undersupplied for, call it regular single family housing, which we are still massively undersupplied for single family housing, specifically in workforce housing, which is the neighborhoods that we invest in. And you're not going to do a whole lot of build to rent, 200 unit subdivisions in the workforce housing neighborhoods that we serve. So we're sort of risk mitigated there. But you could do that. Here's the other thing. So there's three buckets of supply. There used to just be regular single family housing and apartments. Now there's a third one, which is build to rent supply. So let's say build to rent went bonkers. You could do it in Jacksonville. We don't see it happening. Single family is undersupplied. And what's going on with apartments? Because if the thesis here is that it's so easy to build 100 single family houses and change the supply scenario through build to rent, well, it's a lot easier and more efficient and faster to build 100 unit apartment complexes because it's usually, a few buildings instead of 100 buildings, So what's going on in apartment units and apartment buildings in Jacksonville is really significant. We've outlined this a couple of times in the quarterly market outlook, but there was a huge rush of building apartments, bringing a ton of supply over the last few years. That stopped. Apartment starts are down about 75% from last year to this year. And so what's happening is that inventory in apartments that was absorbed over the last few years, it's not getting restarted. And so that is dropping the supply, which single family, build to rent, apartments, we all kind of play in the same pool of supply. So I probably went way more in depth there. I don't think that article specifically does it justice when it talks about rents going down overall, and it misses the point when it's not even talking about what apartment starts are doing in parts of the country like Jacksonville.
Excellently said, GC. And Linda says, thank you, Pablo and GC. I'll bet anybody that builds these communities can compete with JWB's management maintenance expertise for their clients. I think something that you said that's, yeah, something that you said that's really, really interesting, GC. And I think what Linda was saying is, can JWB do this? Yes, of course you can do this. Like, it is easier to do this than the way that you do it. There's no doubt in my mind that y'all could go out there, find a tract of land by Middleburg and go build 100 houses, right? I've seen this happen, right? Like I saw South Florida expand this way. Out of college, I went into this market, right? Like when that what we call them back then is tract home markets, right? Like it's like you build a tract of land filled with homes that have like 3 to 4 different units and whatnot, and they're always a little bit further than you want to live in general, right? So it's like when I think of what JWB is doing versus this other option, you kind of go to the edges of town to build bigger for people that want to that can afford to commute and for that they have like like they have a little bit more land, they have a little bit more space. I just feel like what you guys are able to do uniquely in Jacksonville because of the infill lot strategy and the fact that you've bought all these lots and you have them there. It's just a different buyer, man. Like the person that is willing to commute 45 minutes into downtown is a very different person that's like, no, I need to be 15 minutes from my job, and that's where I want to live, right? Like I just think it's such a different, it's a different subsection of the economy that I think these like build to rent things are happening for.
And you're right for a lot of it. I mean, Jacksonville has a ton of land. If you get out in the west side or northwest, even north, you can keep going. You can get really inexpensive land, and you're not that far from a major city, a major downtown. So you can start to do that. And that's one strategy that a lot of builders do and build to rent as well. But the reality is we still have a lot of space internally here in Jacksonville too. So I did want to kind of give that perspective that, build to rent projects do happen within the city limits here in Jacksonville. We really are a unique opportunity to do that. You couldn't do that in Miami, to your point, right?
Yeah.
You can do that here. There are certainly neighborhoods that you just can't do it in because it's completely built out. It was built out in the 50s or 60s, right? But
Yeah.
you can still do that here in Jacksonville inside the city limits to a higher degree
I
than we
mean,
do in
I
other
mean, it's
places.
happening within a couple miles of our homes, man. Like that whole area of like Hodges and Kernan and
Yeah.
stuff like that. That stuff is happening.
Yeah. And and if anybody's curious, right, we have a part in the build to rent kind of ecosystem as well. We don't do build to rent and then package it up in a subdivision and then sell it off, which is typically how it's done. But there are companies that we will acquire land and then companies will hire us to do the horizontal or the vertical development for them. So we're absolutely a part of that ecosystem. We do it. It's a smaller part of our business. It has nothing to do with our current clientele, but those projects have been going on. They happen inside Jacksonville city limits. We do it, but we know it's not right for our core business because we like serving everyday investors.
Love it. Good stuff, GC. Jen fills in the fairy godmother of our community, has an announcement she wants me to read out, and I will because she's the fairy godmother. She says, hey, JWB family, we're going to have a NorCal, not your average investor meetup. So if you're in the Northern California area, anywhere kind of like within striking distance of the Bay Area, Saturday, November 15th. You got plenty of time to get your ducks in a row in Cupertino, California, at BJ's Restaurant and Brew House at 10690 North De Anza Boulevard from 4 p.m. to 6 p.m. So that's November 15th, Saturday, November 15th, BJ's in Cupertino, California, from 4 p.m. to 6 p.m. The address is 10690 North De Anza Boulevard. If you want to join, feel free to text Jen at 408-833-9868, 408-833-9868, or shoot her an email, jenniferfilzen@gmail.com. We love it when Jen does these. That Northern California kind of like local meetup is awesome. Like that has just been, it's kind of like, it was the origin of like our IRL meetups when Jen and Drew Barnhill met up in Atlanta, and then she started doing it in her backyard, and now that thing continues to go strong. So I love that Jen continues to do that stuff.
I
Go
agree.
go
It's
check them out.
awesome.
All right. Ty Oladipo has a question. What are your thoughts in, if any, on investing in REITs versus direct residential investments? Obviously, one loses on the five profit centers you discuss, but wonder if you have any additional thoughts.
Ty, I would love to go more in depth into that, but the show is about education, and I'm not allowed to compare asset classes because then it starts to get into that arena of, financial advice and things of that nature. So unfortunately, I'm not able to give you the pros and cons of REITs or investing in homes. I can talk all day long about all the benefits of investing in direct ownership, single family properties, but I can't do a compare and contrast there. I would encourage you to do your due diligence. You can find a lot of articles that can do the pros and cons out there. I can't be a resource for that one. I'm sorry.
Ah, not your average guest. If you check in on the text, it just says not your average guest. So I'm not sure who actually submitted this question, but they're saying, I was reading about the uptick in modular homes, which are cheaper to build than traditional building. What do you think about modular homes, and would JWB ever consider them? Pros and cons.
I love the idea of it. We haven't been able to get anywhere close to making it work. Our thoughts are that the construction industry is ripe for disruption. It is one of those industries that really hasn't changed in, 100 years. And with the ability of technology now today, I mean, we really feel like it's going to happen. We would be open to doing, anything that would deliver a better risk adjusted return for clients. If we could significantly decrease the amount of days or costs of construction, wow, that could be great, not just for clients, that could be great for our communities and for our country. So we're open to it. We've dabbled, we've explored a little bit, haven't gotten anywhere close to where it was a good use of kind of putting together an R&D type project within the JWB walls to do it. The closest thing we came to was the shipping container apartment complex that we built. But what that really shows is that we're open. We have a part of our development, our research and development team here is looking for what are those one or two things each year that we can look at, put some of our own resources into, prove it out, and then hopefully bring to clients like we've done over the years when things like townhomes, for a period of time, nobody did turnkey properties as townhomes, and we did that, or new construction and things like that. So we're open for it. We'll see kind of where it goes in the coming years. We want to be sort of on the forefront when we use our own money, and then, of course, bring it to you if it's something that's a sound part of your investment.
And that was Mark Norman. He just let us know who that was. Mark, thanks for checking that, sending that in. He's saying they're using it out here in SoCal to help rebuild from the fires. Something that folks might not know that Greg is kind of alluding to if you're newer in the community is that JWB is unique in that they have like a full-on R&D department. Like they have essentially cordoned off kind of like a small percentage of kind of like their manpower and their capital, and with their own money they're out there testing these different things. That's why they got into modular. That's why they got into container apartments. It's how built to rent and info lots came to be. It's why this downtown thing has really like grown some legs because if you read Jim Collins' books, right, like the foremost business thinker of our time, he talks about this concept of ping pongs to cannonballs. And I think that you guys do a really, really good job of always iterating and like always placing these ping pong bets in different places. Some turn into cannonballs, like built to rent has in info lots, like the downtown development stuff has. Other things stay ping pong balls, like container apartments, short term rentals, right? Like you're always testing that stuff out. And I know that every time I bring, because I'm like a building science kind of like nerd of stuff, right? Like anytime I bring one of these innovative ideas, it feels like you guys have at least thought like ran some numbers or even like dipped your toe in it, and you're always kind of like on the cutting edge of these kind of like envelopes and different ways of bringing homes forward, and the day that it becomes a thing you're going to be first to it, which feels really cool.
Yeah, I mean, and we're open. And if folks have ideas, you can just send them straight to your portfolio manager at JWB. It'll make its way to our research and development department, and I mean, we'll put the man hours into figuring out if it's worth it. Because there's kind of there's that three-step process. It's being on the front end of like what's happening, what are the opportunities out there, which I think we do a really good job because we have those resources that are devoted to doing that. Then we have part two, which is we can explore it our own self. We can explore it with our own money, which is, I think, where many companies fail. They get excited about an idea and they go right to step three, which is selling it. That place right there in the middle there, step two, allows us to vet it out to protect you and to protect our reputation so that when I come to you, our sales team comes to you and say, hey guys, this is a really good thing for you to invest in, you're going to know that it's been thoroughly vetted. Step three is that part. So let us know, Mark, if you have some insight, or maybe it's just an article, you can send it to us. You can send it to Pablo and Joanna. You can send it to my team. We might do a show on it. We might go and run with it and start to do an analysis on it. And who knows? Maybe it's the next venture coming out of the R&D department.
Wouldn't that be cool? Wouldn't that be cool? All right. As we end today, Not Your Average Insights, total community show. I think this one really played out. But we came with our topics. You brought some extra topics. We discussed them. I want to give a shout out to the mountain man, Bill Green. He's got a new book out, Screen Gold, Building Wealth with Movie and TV Props. Go check that out by Bill Green, author inside of our community. Love that. We have multiple authors in our community, might I add. And I want to give a shout out to our friends in the Pacific Northwest, Nadeem, Laura, Pamela, heartbreaking Game 7, ALCS, lost last night to Toronto, our neighbors north of the border, but a really, really cool moment in baseball. And GC, I thought this was a good show, buddy. What do you think? We haven't done this in a while.
Man, I love this. I love this venture. Like this Not Your Average Insights was something you came up with really, I don't know, a few years ago. Every time we do it, I think we end the show and we're like, man, I love this. This is awesome. So
Yeah.
I think we've got more and more of these planned out. I think it's becoming, kind of, just something that allows us to bring a ton of value and be right in the mix with what's important right now with our clients. So I love it, man.
Agreed. Agreed. Love the two-way conversation. Appreciate the 70 plus people that took an hour out of their day to join it in the middle of the workday. That's what we're doing out here, getting educated, becoming better, thinking differently. Next week, our Florida rental property taxes hurting investors. We are tackling that topic. It has been sent in by multiple of our community members. We're going deep into rental property taxes in Florida and shining a big old spotlight on them. GC, from now till then, any word of advice for the community?
Don't be average.